Good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, May 9th, 2022. Great start to the week in terms of trading. There was plenty to do. There was great moves in both directions with a very strong bias to the downside, but still there were some tradable rallies. And all in all, it was a very good trading day and an important day to keep our wits about us, so to speak. I needed to continue to focus. When there's a slip in the focus, a slip in the mindset, that can just become distracting, and it's turning you away from what's actually happening and having to play cleanup on aisle 7 or whatever the situation may have been. It was the type of day, though, that if that did happen and you were able to get your mindset back in order and your trade back in order, you could make up losses, and even losses that tend to be on a little bit of a heavier side for the account size. So having said all that, it was a good day in terms of the market following through on analysis. The market making it clear also via the signs that I went over on yesterday's update about if it didn't turn and rally and it started to break down, these would be our signs. One of them, and an important one, being moving to a new low. And when it did that and that follow through, it just ended up being a solid down candle. On the larger picture, no changes. We continue to work through an intermediate third wave down. Within that intermediate third wave, there will be 5 waves of minor degree, of which I have 1 and 2 complete. That puts us in minor 3 of the intermediate 3. Now I'm going to go down to the hourly, where we can see the breakdown. There's minor 1, there's minor 2. So now we're in that minor third. I had counted it as a minute wave 1 right there. And then this was minute wave 2. And now we're dropping in that minute third wave. The fact that it came up and it did not move up does not necessarily state that this, considering this a wave 2, was out of line, because it truly is not. It just suggests very heavily, if it is the wave 2, it ended in a failure because it failed to kind of come back up, although I might have to say A, B, C, but that's not the way it went. It went down, it went up first, say from here, and then went down. Either that or the failure is here. But in any case, we would have a very strong failure. And the message behind that is that the pickup of the downside, because that's number 1, the trend is down. Number 2, the power would be coming from the sell side. They're pushing against prices. Number 3, we are at a point of recognition where a majority of the market participants are now agreeing that, oh, we're going down. Oh, we need to correct. Oh, we need to figure this out in terms of what will be the damage done on this particular company, on this particular product, on this commodity, because we have a lot of readjusting going on right now. There's a lot of price readjustments across the board in all asset classes. What survives, what doesn't survive. And in this process, if you're not concerned about the movement in the dollar, there are a lot of dollars flying around right now in all markets. And I mean flying around. And if you trade a cash product, such as the NASDAQ future, the S&P future, all of the futures markets, they're straight commodities, oil, grains, wheat, et cetera, yes, those contracts do expire into product, but they're cash settled each night, and provided you don't get exercised. In any case, what we're presenting right now is that everything is lining up. So I don't have a whole lot of reason to believe that this larger third wave is not continuing, that the realization that, okay, we need to reprice things because interest rates are going up, because, excuse me, inflation is strong. And those of us that actually go to the grocery store and that we're buying the food and we're putting the gas in the car, we begin to realize it is stacking up. Then on top of that, you get your utility bill, which had jumped 8 or 9 or 10%. And then again, you're not getting that inflation relief from getting a wage bump. And so things, you start to go, okay, I'm spending a lot of money and not really getting anything. So a lot of repricing. And a lot of it in the commodities, is it overdone? Is it overcooked? Or is it not high enough, et cetera? Those types of things have not been decided just yet, because there's not enough information. There's still outside influence on each of those markets. But what we get to deal with here in the equity or in the NASDAQ and the futures market is pretty much cash settlement, but we're dealing with collectively what's happening to, in this product, in the NASDAQ, 100 stocks. And so the price structure in a lot of the NASDAQ, I don't know if it's inherent or what a particular reason would be, but the evaluations have been very high. The expectations that these companies would continue to just roll out huge profit after huge profit after huge profit would just continue unabated, and not really understanding that, well, there's a lot that goes into that. And when you're running up against, well, we have inflation now, you're running up against all these things, it's time to readjust. Again, not saying that Apple or any of these companies are bad companies, because they are not. They obviously have figured out some things, right? They make a lot of money, but they have to readjust to what's happening around them. So once again, I draw all of our attention up to the top. That's the top of the food chain. That's the top of the pecking order, and it's called interest rates. Everything decides where it's going to go and how it's going to price dependent on that, because we're either borrowing money or we're lending money, but we're, always the dollars are in move. Now, so if the goal is to kind of play along and to understand what the move is about and understand how that's going to affect each of us and what it should do to prices, well, then you can get a better idea. And using Elliott puts that whole picture together very cleanly. Again, as I want to explain, Elliott does not take into consideration any fundamentals, political or geopolitical situations or occurrences around the world, does not consider it. Elliott wave is based on human emotional interaction. How we feel, what we think. Are we operating on fear? Are we, whatever our emotion is, it's chartable, and the patterns repeat. Now, this was determined by R.N. Elliott back in the 30s, the 1930s, and has stood the test of time. And the reason is because we collectively as a society continue to just react in the same fashion. And that's being formed by the size of the whole pattern. And I know I'm digressing here, but please stick with me, because it's important to put in what the size is. This is ultimate where that correction, now that's the top of our food chain in terms of the Elliott right now. And it's a super cycle wave 3. So we're in a super cycle wave 4 correction. What are the parameters I can immediately put around that? If I go out to my monthly chart, it tells me that a fourth wave on the super cycle degree level will end up finding its terminus over a very long period of time at the previous fourth wave of one lesser degree. Well, that's the cycle degree. And so we're looking at eventually, that the NASDAQ is likely to end up at 809. Now, having said that, I have to tell you, it's going to take years to get there, years. We can't be in a rush, and we just have to let the market unfold. So we're at the infancy, excuse me. And so being here is people do not see it. People are calling for a bottom here. Well, maybe on that level, maybe, but I doubt it. Not even on the intermediate level am I looking for a bottom. Even a short-term bottom, I don't see it yet. And my other point that I'm saying is because of how this has stood the test of time, because of the amount of study that I've done myself, I have no reason to change when I see it unfolding. I don't have any reason to distrust what I see. The market, again, being interpreted by all of us, well, it's reacting pretty much right in line with what I would expect in this size of a move and the direction that it's going. So we're on track. Now, dropping inside this third, we're having a question as to whether could this possibly completed that first wave down. And it's like, well, if I had to say, I would say I don't think so, but I can't say no. So yes, that exists, but I'm going to stick with what I had, and that minute 1 was here, minute 2 is here, and we're dropping in that minute 3. So collectively as a part of minor 3, I'm looking to get us down here at least 10,991, and actually a little bit more than that, because I would rather start with wave 3 being the longest wave and not wave 1, or them being equal. So I'm suggesting that minor 3, I'd like to see maybe down here. Well, that's 2,000 points away. So it's a lot of downside yet to come. Is it going to come in a straight line? Would be nice, because then we could get it over with, right? No problem. But it's not. And it will be very tradable, but it's going to be tradable going in both directions, period. That's the way it is. So then I go down, take it down to a 30-minute chart. And now I'm going to look at this to see what are we, that was a very nice decline, and it just kind of went. But it had intermittent little pops in price, 12,238, and it ran itself all the way up to 12,419. If you're trading the future and you're trading the mini, it's $20 a point. And it basically ran 85 points. $20 a point. It's a lot of money on a one lot. But if you get a held out, you did make your money, because we did end up going all the way down to 12,135. But these are very tradable, but they can be very deceiving. Volatility will go in both directions. This was an interesting pop because I actually was short. And it was very interesting to see it drop. Because it went up and came back down almost immediately and then sat here for a while. Okay, so what is all of this? I still think, like I said, we're inside of a third wave down. And this is a 1 and a 2, so I need to count a third, and that third has to be 5. So I still can do a great start, 1, 2, and then it starts to get choppy and a little bit more different, because that we have to make sure we count it. So if this is a 1, 2, that's a 1, 2, and then what do we got? 3, 4, 5 of 3, 4, 1, 2, 3, 4, and then another 5 of 3. So we could actually head down to our next support and just complete a third from this level. So that would be a minute 3. Then we do a minute 4 and a minute 5, and then we've got the minor 3 finished. And that minor 3, as I'm looking at least for here, if not lower. So you can see that we start to gap a little bit, and that the possibilities is that, yeah, the market can do that. We're still getting that sell pressure. They're still doing readjustments. It's like, well, how far can it go? Well, just work out your math. We have support Fibonacci wise at 11,971. You can build a little zone around it. If it breaks, then, and I mean breaks, and you will know when it breaks, first it's going to fight to try to get back to it. Then if it doesn't, it will come back down to here. That's the next level. This is not necessarily a value area. That was value. This could be value. This could be value. So you consider they just travel. The moving averages are continuing to point down. So the pattern should fulfill. Again, if for whatever reason we walk in and they take it above the 8, then above the 20, then above the 50, and then they get above the 200, it's going to go. It will go. Technically, it will go. Whatever reason somebody wants to come in and talk about, that's up to them. But I'm telling you, technically, it will go. Now, is that what I'm expecting? No, I'm not. It has to be driven by something. It has to be driven by some new news. I was going to say some noise, could be both, from the outside. And take it, and it would just pop because all the algorithms push their buttons and boom, off we go. But then we do have resistance. If it starts to go, breaks the 50, it has resistance at 575. Breaks the 200, it has resistance at 950. So, well, do I think it should go back there? No, not before it drops to 11,970. And then I'm still only looking for a smaller fourth wave. I'm not looking for something that's going to carry the market past that level. Even if it comes down to 11,970, I'm still not looking for something that's going to pop this thing and take it to the moon. Even if it comes down to 11,747, I'm still not. Yeah, we're going to get a little bounce, and then we get down. We're dropping a fifth. And that fifth should resemble some of this. Now, so for tomorrow, I would say that we are likely to continue lower. Again, point of recognition type stuff. Now realizing, okay, we broke below 1,200, 200. Now will we break below 12,100? Will we break below 12,000? The Fibonacci tells us yes. But we're going to maybe get 30 points below and then do a decent bounce. And that bounce will bring us probably back up to where we are sitting currently. That wouldn't be too far of a stretch, because this would be not a minor, but it would be a third, and then we get a 4, and then we get a 5, and then we're done with that. So we're in still. Minute 1, minute 2, we're in minute 3, and it's not done. Inside of minute 3, there's still more to go. And then we'll get up and then a down. So we still have more downside to go. The market will be buffeted by bounces. I still believe that the moving averages are the name of the ticket, and those are the ones to watch in terms of coming back up. That's what I'm using as my resistance levels. You can put in smaller fibs. If you're down on a 2-minute or 5-minute, you can put them in, but understand it's just for something small. So a lot of times things in particularly very volatile markets like what we have, bounces will go further than expected. So because it's a pushing of a button, it's an algorithm running after looking for fills, and it's going to just do what it is being told to do. So this is where I'm going to leave it. Continue to use the moving averages, all pointing down. Continue to use the Elliott and the Fibonacci, all in conjunction with price action. Have a great trading day tomorrow, and the next update will be on Tuesday, May 10th.